Clay Patton on the Rural Radio Network. Let's take a look now at your closing livestock trade with David Ericson of Ag Optimist in Akron, Iowa. And David, the livestock trade rolls in negative for the cattle and for the hogs, but overall, was it a pretty thin day of trade just ahead of the holiday?
Yeah, very, very thin trade. It's been a very thin week so far. The market tries to get our hopes up, at some point in time each day, it seems like this week, and, just hasn't been able to have any follow through. I wouldn't consider this week of trade, really, especially today in the disaster area, just mildly lower in the fats, feeders off a dollar, just over $1. Technically looking at the December live cattle, they held right where they should have, if only by a thread right on their 10-day moving average. So we'll see if that's going to continue to be an area of support moving forward. Fundamentally, cash has started to pick up a little bit with the trade being reported about $1 to $1.50 lower than where we were a week ago. On a positive note, boxes were reported higher on the morning print. So, that's a good thing. That market is moving in the right direction. On the feeder cattle side of things, the funds at the end of the day, they got involved and they pushed the market too high. And, they were kind of to blame on the wash out there. But they seem mostly uninvolved right now and, have a small net short position. So they shouldn't be in the way moving forward. One final note on the cattle on feed report, which we had last Friday. If you kind of look at the breakdown of, the beef cows that were on feed, it's a little higher. So this is unlike what we've seen in the past where we're having expansion.
And that is David Ericson with Ag Optimist. Learn more at agoptimist.com. Do remember, trade futures and options involve risk of loss and may not be suitable for all investors.